Wall Street ended mixed on Monday as investors began the last week of September and the quarter with a pivot to value as tech shares hurt by rising Treasury yields weighed on the Nasdaq. The S&P 500 index joined the Nasdaq in negative territory while the Dow ended higher. Benchmark U.S. Treasury yields rose to the benefit of rate-sensitive financials, and rising crude prices pushed energy stocks higher, stoking fears that inflation will prove longer lasting than anticipated. Kramer Capital Research's Chief Investment Officer Hillary Kramer says inflation is what worries her, and a broken supply chain leaving dozens of ships stranded at the ports of Los Angeles and Long Beach.
It costs money for these ships to have stuff on them and not be able to unload and head back. We don't have enough truck drivers. We don't have enough ways to transport things. All of that is due to inflationary pressures. And inflation is going to really throw a wrench into the stock market going forward, as well as a number of other reasons that could create an overhang as we look at the greater market.
Rising yields hurt some tech market leaders on Monday, including Microsoft, Apple, and Amazon. Morgan Stanley lowered its price target on Amazon, noting that its growing workforce and rising wages, quote, revealed more profit pressure ahead. Meanwhile, investors are keeping an eye on negotiations in Washington over funding the government and raising the debt ceiling, as talks heated up at the start of the week that could also include a vote on U.S. President Joe Biden's $1 trillion infrastructure bill.
Google is trying to overturn a record $5.1 billion fine imposed on it by the EU. Brussels set the penalty in 2018 over allegations the firm used its Android operating system to thwart rivals. It says Google forced phone makers to install its search engine and other tools. In court on Monday, Google rejected the allegation, calling its software a success story of competition at work. It also hit out at officials for overlooking Apple. Google said the EU ignored the power of its Silicon Valley rival and wrongly concluded that Android enjoyed dominance in operating systems. The European Commission rejected that argument, saying Apple's market share was small compared to Google's. Android is found on about 80% of the world's smartphones.
State-backed media in China heralded the return of the Huawei top executive to home soil as a chance to reboot relations with the US on Monday. Meng Wanzhou, the chief financial officer of tech giant Huawei, touched down in China over the weekend, arriving to a red carpet welcome after a 3-year fight in Canada against extradition to the United States. Her return follows a deal with US prosecutors to end a bank fraud case against her and closes a long-running source of diplomatic friction. On Monday morning, state-backed China Daily painted the release as an opportunity to reset ties with America. A reset, they say, quote, depends on the extent to which Washington and Ottawa are willing to heed the lessons of their rash ploy. But China's The Global Times warned that what it called toxic political rhetoric could still poison the atmosphere. It accused anti-China forces of creating noise, citing weekend criticism by US Senator Marco Rubio. Meanwhile, Chinese press has been relatively quiet on the release of Canadians Michael Kovrig and Michael Spavor. They were let go on the same day of Meng's return after being held in China for more than 1,000 days. Although one Sunday article in the Global Times said the two were released on bail for medical reasons. Meng was detained in 2018 in Vancouver after a New York court issued an arrest warrant, saying she tried to cover up attempts by Huawei-linked companies to sell equipment to Iran in breach of US sanctions. The two Canadians were detained by Chinese authorities on spying charges. China has previously denied engaging in hostage diplomacy, insisting that the arrest and detention of the Canadians was not tied in any way to the proceedings against Meng.
Cryptocurrency exchanges are racing to sever ties with customers in mainland China. The move comes after Beijing signalled last week that it was cracking down on e-coin trading. 10 powerful Chinese regulators said that overseas exchanges would now be barred from providing services to mainland customers via the internet. That was previously a grey area in the rules. On Monday, major platforms Binance and Huawei Global stopped registering new users in the country. Huawei also pledged to clean up existing accounts by the end of the year. But that didn't stop shares in affiliate Huawei Tech plunging by more than a fifth. Crypto firms around the world face increased scrutiny, but outright bans are rare. However, authorities in China have come to see Bitcoin and the like as volatile, speculative assets of no intrinsic value. They also see them as a way to get around the country's capital controls. Following crackdowns on big tech firms and other sectors, it looks like Beijing watchdogs now have crypto in their sights.
German shares hit 10-day highs on Monday after Sunday's election outcome reduced chances of a left-wing coalition forming a government. Germany's blue-chip DAX jumped as much as 0.9% in early trade before easing back. It led gains among regional indexes. The country's centre-left Social Democrats had hoped to join forces with the Greens and the Liberal Free Democrats after they narrowly won their first national election since 2005. Forming the new government could take time, but investors were relieved that the hard-left Linke Party fell below the 5% threshold needed to enter Parliament. Here's Robert Halver, head of capital analysis at Baader Bank.
The German stock exchange is relaxed. A leftist government was avoided. It would have meant too much uncertainty. It doesn't matter now whether we get a Jamaica or traffic light coalition government. We can live with either. What's important, however, is that we get a government quickly.
Broader European markets were also enjoying a surge in crude prices that powered oil stocks. The oil and gas index climbed 1.8% to hit a 3-month high, as Brent futures headed for $80 per barrel amid supply concerns. Oil majors jumped, with BP up around 3%. While worries about hawkish central bank policies, fallout from China's Evergrande's financial troubles and inflation have caused concern, investors are hoping that progress on tackling the global health crisis will drive a steady global recovery. Those hopes have lifted the regional Stoxx 600 index more than 16% so far this year.